Okay, we are good to go.
Okay, we'll call to order the Police Fire Pension Board meeting for November 21st, 2022. The attendance noted.
Yes.
Look for the approval of the agenda.
Make a motion.
A second.
Maybe motion and a second. Any discussion? Hearing none. All those in favor?
Aye.
Opposed? All right, we'll move to the approval of the minutes from our regular meeting of October 19th, 2022.
I'll make a motion to accept the minutes from last month's meeting. I'll second it.
We have a motion and a second to approve the minutes. Any discussion, comments? Hearing none, all those in favor?
Aye.
Opposed? We'll move on to the bank summary of assets and expenses and the quarterly bank statement summary for October.
So as of October 31st, the market value of the portfolio was about 152.7 million, a gain of about 4.8 million from September 30th. We had a few expenses, a small administrative fee from Loomis, Cap Trust quarterly fees, and then Comerica Bank quarterly fees. And I'll scroll down and you'll see the quarterly summary. Let me know if you have any questions.
Anybody have any questions? Okay, if not, I'll look for a motion to approve.
Yeah, I'll make a motion. The approval of the quarterly bank statement.
A second.
Motion and a second. Any discussion? Hearing none, all those in favor?
Aye.
Aye, opposed. We'll move on to the board administrator reports. I have nothing. Ed,
Nope, nothing for me.
Tammy,
Nothing.
Jake,
Nothing.
this isn't here. Is he?
He's
Oh,
hiding.
shit. Oh, sorry. Strike that from the record.
Sure don't love that on the YouTube
I
channel.
didn't recognize you when he came in with the hat on the beard. Sorry about that.
No, you're fine.
Uh,
We just were notified yesterday of the passing of one of our retired officers, Joe Wilder. So he was retired for just over a year.
Oh,
So
sorry to hear that.
we'll make sure everything gets forwarded to his wife and have a orderly transition.
Joe had the downtown beat for a while, didn't he?
Yep.
Yeah.
At least 9 years.
9 years.
So,
About that. Lily. You will.
So William Gench, a police sergeant, entered the drop effective August 18th. His resolution is below. Jim Blocker, our police chief, entered the drop effective September 30th. His resolution is also below. Chris Hug, police officer, terminated on October 15th. He is vested with the city. A letter regarding his options for either withdrawal or future pension benefit was sent on November 3rd. Just a follow-up note, since you guys changed the asset allocation last board meeting, the 6.25% was great for the rate of return without an asterisk next to it for the GRS report. So that's
Great.
awesome.
Excellent.
Oh, and then I know, I don't remember when this was that we talked about it, but maybe it was when you went to the MAPERS conference.
Mhm.
About being able to search for resolutions through the city website. So I just wanted to show you guys kind of how that looks from the website perspective. So this is the police and fire pensions webpage through City of Battle Creek. I'm sure most of you are pretty familiar with that. So then if you go and look at our agendas and our minutes, there is like a search feature down here. So if you're looking for someone specifically, so my example is Tracy Blocker from the fire department. So if we were to search his name, it'll come up and show what minutes his name is found in. One improvement was that I could create a hyperlink that would take you directly to his resolution, so you don't have to scroll through the minutes to see it. So these are the minutes from that meeting, and then if I can get back to this. Okay, here we go. So then the improvement is we could put like this little hyperlink here in the agenda itself. So then if you click on it, it just goes straight to that, the resolutions that pertain to that meeting. So it just makes it a little easier for people to search on the website if they're looking for something specifically. So if you have anyone reach out that wants to know how to do this, now you know.
All right, great, thank you.
Yeah.
Very slick.
Okay. Oh, and then the two resolutions. So one for William Gensch to read over, and then Jim Blocker.
Make a motion to approve both.
I'll second.
We have a motion and a second to approve both of these resolutions for Mr. Gensch and for Chief Blocker. Any discussion? Hearing none, all those in favor?
Aye.
Opposed? They are approved. Jim's birthday was either yesterday or today.
Oh, really?
Okay, new business. 2023 meeting schedule. The only date on there that I can think of that I have a conflict right now is a June meeting. Yeah, we're gonna be gone out west for a few weeks. We'll get back until at least first week of July. But we can address that when we get closer to it.
Okay.
So. Anybody has any objection, we'll look, motion to approve this tentative schedule.
I'll make a motion to approve the 2023 schedule of meetings.
I'll second.
Okay, got a motion second. Any other discussion? Hearing none. All those in favor?
Aye.
Opposed? We'll work with this. Next thing we have is the policy review of our investment policy, which will have some modification based on action taken last month.
So to that point, I'll just go ahead and,
Yeah.
so pages 14 and 15 of the PDF contain the investment policy statement. Looks like some of you had that printed out as well. We did bring out a new template today. So although I'm happy to go through this original IPS, there are some changes. So I think what would just make sense is for me to review the updated IPS, which contains the targets that were agreed upon last meeting, if that sounds okay to the board.
Yeah, and then highlight any areas, anything that changed, right?
Yeah, absolutely. It won't be a red line because this is the PMFA IPS and now we're at Cap Trust. So it really is a new template, but I brought out a little outline of just to cover. Maybe it'll even be helpful for you to keep that current IPS next to you, and then I can go over the electronic copy of the new one and outline any changes. All right,
Okay, so the new one's in your document here.
exactly.
Okay.
And why don't I go ahead and do that now? So if you click on the little book shape on the top right, you'll see there's a heading called Draft IPS, or you could skip ahead to page 138, whatever easiest. And we can even go to page 139, which contains the table of contents. So as a compare and contrast with the updated IPS to the current that, again, you have printed off, candidly, they're fairly similar. You're going to notice the body of this updated IPS is a bit longer, and that's somewhat just because of formatting. So for example, page 3, you can see has definitions on it, which essentially takes a page that just goes through and defines the different parties involved with the retirement system. So it goes through and defines the board and what an investment policy statement is, what an investment consultant is. And then starting on, I'll just kind of flip through page by page, but page 141, or in other words, it says mission statement and purpose. Again, the current IPS also has a purpose. This will just define it a little bit different based on an updated template. So it says this investment policy statement is intended primarily to set forth the expectations of the board with respect to the investment management and performance of the assets of the system. Then it goes on to talk about the board adopting the investment policy statement, essentially in responsibility of the authority to manage the system's assets. And it goes on to say the IPS provides guidance in the following areas. So determining an appropriate risk level for the investment assets, seeking to ensure prudent diversification of the investment assets, defining responsibilities of the board for managing the investment process, defining monitoring criteria for selected investment options and investment managers, and then establishing asset allocation targets for asset classes and investment styles deemed suitable for the investment assets and providing rebalancing guidelines. Again, these are very, very similar objectives and purpose that were in the current IPS, just with a little different language, I would say. Page 142 goes over investment goals and objectives. And then it as well as goes through investment philosophy, which really just talks about what investment return is, preservation and appreciation of capital, and then how the board would define risk as well, and talks about certain investment principles such as volatility and diversification. Okay. Page 145 starts listing the responsibilities of the board. Again, these would be fairly similar to what we outline in the current investment policy statement. If the board would feel more comfortable reviewing some of these between meetings, I think that's okay. But the bottom line is you can see the bottom bullet there says remain in compliance with the applicable Michigan Public Acts. One of the differences, instead of just defining Michigan Public Act 314, of course, we know there's Michigan Public Act 347 that amended 314. So we just list the public acts more broadly in this IPS as far as compliance of which. 146 then goes into the responsibilities of the investment consultant. And again, a lot of the items you'll see are things that are outlined in monthly or quarterly meetings. So of course, assisting in the development of the investment policy statement, conducting investment manager searches over time, providing research and analysis on ongoing performance, and periodically monitoring the investments to provide reports, or in other words, our quarterly monitoring reports, one of which we'll go over today, which covers the end of the third quarter. I think that the heart of the investment policy statement and what changes on page 148. And you'll see now the agreed upon targets, which is listed there in the middle column for what the retirement system has moved to. I want to reiterate that the actual system moved to the new targets in early November. It was like late October, Loomis was able to raise the cash, and then early November, the purchases were made to move to more of a stock heavy portfolio allocation. So the agreed upon targets, 3% cash, 32% in what we'd call broad fixed income. And then that makes your 35% fixed income target. Then you've got equities broken down by domestic equities as well as international. Now, what we don't feel like we need to do is outline the specific targets to small and mid cap within US equities, and there is method or reasoning behind that. Typically, these can change when we do these asset allocation studies with you, 1% to 2% on a year-to-year basis. We would document these in the report and the notes, but you don't have to update the IPS every single time there's a small incremental shift. We also give minimum and maximum targets to each asset class for reasons of rebalancing. Now, when you read on in the investment policy statement, you'll see there's strong, I should say broad language around rebalancing that says may. You don't want to paint yourself into a box if you have very quick market volatility. So for example, we've seen a week where the market was up about 10% on the equity side. That clearly would make your target of 65%. If it increased to 10%, it'd be around 72% basically. We want to have just a little bit of nimble or flexibility around that, because if we rebalance and then the market remains volatile, all of a sudden you can be underweight your target. So we're of course meeting on a monthly basis, so we don't have great concern around not monitoring these targets. We work with some boards that meet quarterly or semi-annually, and so that's when we have a bit more email correspondence around rebalancing. It's a common question, and this was actually brought up last meeting, what the Public Act outlines for a maximum of what they call global equity. And there's some gray area around that. So the Public Act defines global, or again, when we talk international equity, of fixed income or equity positions that are traded on exchanges outside of the United States. We would feel that your mutual funds that are implementing your international equity, they're traded here within the United States. So there's some gray area of exactly what global or international equity is in the Public Act. The bottom line is they put an allocation maximum of 20% of the retirement system, which again, we wouldn't look like your mutual funds have to apply to that because they're traded here in the US. But you also have that basket clause in the Public Act, just as a reminder, that allows for up to 15% of securities in the system that don't have to be applicable to the guidelines of the Act. So even if we took the stance that the 20% is the maximum, because of that 15% basket clause, we're allowed flexibility, within what's defined here. Okay. Then page 149, and by the way, I'm Noam Blabin, so feel free to cut me off with any questions, but 149 and 150 just outline essentially, and by the way, we have an investment recommendation today to replace a manager. So we'll look at some of these investment guidelines in real time per se, but what we're actually looking at internally when we make selection of investment managers. And so, total firm assets under management in a specific product, sustainable stability and quality of the investment firm and personnel, risk adjusted performance, et cetera. And then this ties on a monitoring basis to our quarterly report. So if you think about it, and 150 defines some of this, but we've got that color coordinated report that looks at every single investment, both from what we call a quantitative perspective, how the fund performed, how much risk did it take, and a qualitative perspective, who's the management team, has there been turnover, how long's the firm been around. So this is a non-ERISA plan, it's a governmental plan, but ERISA attorneys would say the last thing you want is an investment policy statement that you document, what you should be looking at, but you're not. Your investment report ties very closely to the criteria we lay out here. All right. So I will pause there and happy to take any questions, or again, I don't want the board to feel you have to approve today. I will say though, how our operations team works is before they update the targets and any reporting, they do need a signed executed IPS just to make sure from a compliance standpoint, we're staying on the guidelines that are approved by the board.
I'd say it, the way this is broken down, it makes things much clearer.
Sure.
I mean, there's a little more detail to it.
But we would agree on our end too, Stan.
Anybody have any questions on this for Jeremy? Gordon?
It looks nice. Like how it's.
Yeah, I like
written too, yeah.
the bullet
Yeah,
points where
me
it's a
too.
quick reference.
Mhm.
Everybody's in agreement. I'll look for a motion to approve it.
I'll make a motion to accept the investment policy statement.
A second.
We have a motion and a second. Is there any other discussion? Hearing none. All those in favor?
Aye.
Opposed? We have a new investment policy, so I'm sure you'll get that.
Fantastic. Yeah, last time we sent it to Tammy and Stan for signature via DocuSign. I assume that's still okay.
DocuSign will work
Yeah.
fine.
Hey, can you send us the whole board, please? We can read through it in more detail.
Yeah, absolutely. And did the board, we put it in the combined meeting materials. I could send it separately if that's easiest. Or it's the last document in there, so.
Yeah, that'll work. Wouldn't hurt to have a paper copy down.
Okay.
On file.
It's attached though, right?
It
So we could just print it out.
is.
Yeah, that's
Yep.
good.
Mhm.
Okay.
Okay.
That's good.
Great. So we will finalize on our end and it'll go to me for signature as well. And we obviously will review periodically as well, typically around once a year. Great.
Good.
Okay, next item is Jeremy again with the test report.
Hate to be a hog here, right? So I hate to do this to you, but let's move all the way back to page 74, which is our cap trust agenda. A little more lengthy than normal, but I promise I'll be brief with some of these topics. I will give you a capital markets commentary and update. Now, candidly, we spent quite a bit of time last meeting talking about the end of the third quarter and conditions that we were seeing within Cap Trust. So some of that I'll keep broad, but I will give you a more rosy return perspective through the end of last week, because we have seen a bounce back there on a relative basis. We'll review our quarterly report. We do have a recommendation to replace our small cap value manager. And then we'll look at an October 31 update, what we call a flash report, and then the current portfolio update as well. Again, both Lily hit on this a little bit, but are moved up from a balance standpoint since the end of the third quarter. Okay, so I'm going to skip ahead to page 78. And again, please feel free to interrupt me with any questions. As we discussed last meeting, and we showed kind of a scatter plot, if you remember, of how difficult the year-to-date returns have been so far for stocks and bonds. I'm going to focus on that tan bar there. US large cap stocks represented by the S&P 500. We're down nearly 24% for the first 9 months of the year. Almost 5%, you can see down 4.9 was attributable to the third quarter. As we move to the left, or what we'd call smaller international markets, US small cap stocks were down over 25%, and developed international were down nearly 27%. As an update though, as of end of last week, year to date now, US large cap stocks are down about 15.5%. In other words, they've corrected themselves a little over 8% so far in the fourth quarter. International stocks are also down a little over 15%. So they've rallied even more so far here in the fourth quarter to the tune of about 12%. And smaller stocks are down about 16%, and they've rallied about 9% so far here in the fourth quarter. As we turn the page just to page 79, I'm focusing on these bottom three tables. What this shows is, yes, US large cap stocks are down as well as mid and small, but what areas of the market have done best and worst? So just focusing on that middle chart there, large cap value. So sectors like energy and financials have performed best year to date. Mid cap growth has performed the worst, but if you look on the left side of the table, you can see pretty much all value has outperformed all growth. And I'll show you exactly why on the next page, but very briefly over on the left, you can see for the third quarter, a little bit of a reversal of story, right? So value was the worst performer, very hard to time the market. It's a perfect example. But you can see value anywhere down from really the 4 to almost 6% range, where growth, although negative for the most part, wasn't as down as much. So page 80, kind of the who cares of why value over growth. A big part of the story was energy. So that's the one kind of positive ranging bar there. Energy was up near a little over 45% for the year, 2.2% just for the last quarter. And a big driver of that, of course, was rising oil prices, right? On a relative basis. Now, oil prices have started to come down since midsummer, although obviously on a long-term basis still feel expensive. Technology, when you look all the way to the left, that's a big growth oriented sector. Same with consumer discretionary. They were both substantially down still for the last year, which are more growth oriented sectors. Page 81, why are bonds down? And again, I don't want to repeat myself too much from last month, but there's definitely been an increase in interest rates. So I'm just following at that very top table. When you look at the end of June to the end of September, for the last 3 months, there's been a substantial increase in rates. And whether we look at 2 years, 5 years, all the way to the 30, although not up as substantially, definitely an increase. A big headline across the nation, but specifically in Midwest and really West Michigan, are mortgage rates and how much these have spiked just in one quarter. You got your average 30-year mortgage rate now at 7.06%, and that's actually slightly higher here in the fourth quarter on average, where it's stretched over 7.1. So the next page, the economic outlook. What has been headwinds or challenges to the market? Inflation has been a big headwind, right? So rising prices and the concern around that. The Fed has increased interest rates in order to slow that. A big reason the market's reacted fairly positively over the last 2 to 3 weeks is because some of these inflationary reports are coming out and saying at least some of the Fed's actions have worked in the shorter term. Prices have come in more controlled than what they were in the third quarter. Leading indicators are lagging. And so rising mortgage rates have really had the intended effect of slowing home sales. Of course, the concern is, okay, how long are these sales going to be slower? We're hearing definitely from West Michigan realtors and mortgage brokers that the market's really stagnant right now, right? Because what you could afford, and I'll show you a chart on that, 6 months to 12 months ago, you no longer can just on a monthly basis. And then midterm elections, which of course occurred. We don't try to tie. In fact, historically, you can't tie a certain party taking certain roles to how the market reacts, but any type of surprises can lead to volatility. And then tailwinds, just briefly, we are seeing input costs improving. Some supply chain constraints have steadied and gas prices have tailed down. We are continuing to see a strong labor market. In fact, employers are having trouble still filling certain roles, and wage increases are occurring. And then I showed a chart last month, but typically when you have low investor expectations, the market tends to react very well over the next year or two, which that's an environment we're in. All right, page 83, and I just zoom in on that chart on the left. This just shows relatively how quickly rates have been increased by the Fed comparing to historical periods. So our current periods all the way to the left, that dark red line, you can see although rates have increased about the same clip as some of these other time periods, even if you look all the way to the right, that 2015 to 2018, how much more quickly or how many months it's taken to get to that. And by the way, this doesn't even include the last 75 basis point rate hike of the Fed, which occurred in the fourth quarter. So very unique market. But again, what we're seeing from these inflationary reports is initially this is working to cut inflation rising at such a quick clip. And then last but not least, very next page, and again, I focus on these two tables on the left. First, the top one. This is pretty incredible. So your average monthly mortgage payment for existing home sales going back 20 years was just over $1,100, $1,151. Today, or at least as of September 30th, that average payment was just short of $2,500 in other words, it's more than double, right? And then the bottom left, again, I had alluded to this, but we've got 7 consecutive months of falling sales. And that continued into October after the third quarter. So to summarize, we're starting to see positive reports on the inflation front. That was the number one, it's relative, but the number one concern I'd say of the first 9 months of the year. Always the concern though is with these rising rates, will that set into a global recession just based on obviously the cost of money being more expensive to borrow. Okay. Now we'll move on to the system report, page 90. Just as a market value and cash flow summary. We had talked about this last month, but typically on a net basis, 2 to 3 million is pulled per quarter from the retirement system. In fact, that was part of the reason the board wanted to revisit asset allocation and see if we could keep up with some of these withdrawals over time. So when it says current quarter, you can see the net contributions were just short of 2.7 million of withdrawals. You can see the year-to-date amount there as well, just almost at 5 million. And then, of course, unfortunately, the net investment returns have been negative due to, again, falling equities and fixed income. We will give you more of an up-to-date number as we move through, which is been a bounce back here in October and start of November. Page 91. I'll just hit on very briefly because these would reflect the original system asset allocation targets, which now have been updated. And we, of course, are implementing a new investment policy statement. So there is no need for rebalancing at that time. But we did place the trades to move to the new positions again, late October. Page 92 just gives an investment total by fund. The fund I did want to hit on is about 6 down. You'll see Goldman Sachs Small Cap Value. And it'll be a common question. We are recommending to replace that fund. And there's just about 4.4 million in the plan in that fund, or about 3%. More to come on that. Page 93 just shows performance through retirement system over your various timeframes. The last quarter, down 4.84%. Again, part of that bonds just really haven't provided the cushion we typically see for a balanced portfolio. That brought year-to-date performance down about 19.96%. And then you see the 3, 5, and since inception number on an annualized basis. Since inception would be 1/1 of 09. And then your manager performance, page 94 and 95. It just shows what I look at that as the left column, showing how much your bond managers and then your equity managers are down. As a bright spot, when we implemented mutual fund strategies, that PIMCO low duration, so like the third kind of dark line down, was implemented in case of fast interest rates rising. And although the fund's down 5.8%, you can see substantially outperforming Loomis, which again is a very strong long-term manager. But because of its lower duration, it hasn't gone down as much. Page 101 is the monitoring summary. And I alluded to this when we were looking at the draft investment policy statement. Again, we look at both quantitative and qualitative factors for a fund in order to give them a score. Now, I always kind of give the caveat to certain funds. We don't look at investments in a pension plan just in a vacuum or just on their own. So what I mean by that is we really like how PIMCO low duration matches with Loomis Sales core fixed income because of their combined duration. So PIMCO low duration has a duration of about 1. As a reminder, that just means it's not very sensitive to interest rate changes. And so although we scored a 64 because of its long 10-year performance, we know in your report that we're very comfortable with the manager, they're implemented and they've performed as we'd expect. They just have a low duration. Whereas Loomis Sales fixed income obviously scores very high, that very top line. They've underperformed in the year versus PIMCO low duration, but over the long term, they've performed substantially well. Goldman Sachs Small Cap Value, you'll also see marked as red as a 62. And we are recommending to replace that manager today. I'll actually take us to an analysis to talk about that a little bit more. All right. Any questions on that? If not, let's go ahead and move to our fund recommendation. It's on page 119. And you should see on the top, it says manager overview. So Goldman Sachs small cap value, we marked in red. They have had underperformance now since 2020. They underperformed in 2020, 2021, and so far year to date in 2022. In 2020, it was stock selection and energy, materials, and real estate. 2021 was more understandable to us. They avoided some of what we'd call the meme stocks. So like GameStop and AMC, some of these investments that were in the media quite a bit with retail investors. But again, in 2022, they've underperformed. They've had some poor performance in consumer discretionary, specifically within the automobile investments and real estate. So you've got that combined underperformance since 2020, but also their co-portfolio manager, Sean Butkus, has left the team, as well as two of their dedicated analysts within energy and real estate, which is two of the sectors that have struggled when I talked about stock performance. And they haven't actually hired permanent replacements there yet. So it gives us some discomfort that not only is there underperformance, but that now there's this team turnover. And we talked about last year, some other parts of the team and the analysts that had turned over. They have a long-term head portfolio manager, but they also haven't defined a new succession plan since this other co-portfolio manager was meant to step in when she retired. So again, we just feel like there's better options out there within small cap value. So we show Goldman Sachs small cap value on the left. This is more quantitative fund makeup, and then we'll look at performance, of course. But the two options we show are Allspring special small cap value, as well as Delaware small cap value. Both are fantastic managers. We would prefer Allspring special small cap value based on how they hold up in down markets, their long-term performance, as well as their management team, which again, I'll illustrate for the board as we move through. So page 120 is what we call qualitative factors for Allspring. And again, some of this was defined in the investment policy statement, right? So they have an experienced and stable team. Their head portfolio manager's been at the fund since 2002, and there's a co-portfolio manager there since 2009. They also have a deep team of analysts, one of which was promoted to a third co-portfolio manager in 2020. He's been with the team since 2007. So just as much of performance, we at CapTrust will put just as much focus on this, because you can look at an outperforming fund, but if the whole team has changed, you start to think, well, how much have they actually earned of that outperformance, and how much can we count on it going forward? It goes over really their strategy. So they have a balance sheet focused. They look at essentially income statements and earning growth, but making sure that's has comfortable debt structure, as well as is repeatable over time. And they do hold up very well in down markets. They put a focus on downside protection because of the high quality companies they purchase. So page 122 is the performance. So the top, I should say the performance and the risk adjusted statistics. So the top is 5 years. The bottom table is 10 years. Goldman Sachs, of course, is listed first, and then Allspring special small cap value is listed second. We also show another solid option, just not our top choice, in Delaware, and then the index and the peer group. You can see Allspring for the return outperforms both Goldman and Delaware. But when we look at standard deviation, so that's the fourth column over, they have less of a standard deviation than both of these managers, as well as the index and peers. The bottom line is there's just not as much ups and downs, although they outperform. We also look at the 10-year number, which is down below, specifically because this is a long-term team, as I had just highlighted. Again, Allspring with the return of 9.22%, outperforming both of these other managers, as well as the index and peer group. But the standard deviation continues to be lower than all of them. Sharpe ratio is just a fancy word for risk-adjusted return. It's higher than the others. Alpha is, did the manager add an appropriate amount of return based on the risk? And then beta is another word for risk. So if you have a beta 1, that means you have about as much volatility as the index. If it's less than 1, that means you have less than ups and downs, which Allspring does. So page 124, we looked at 5 and 10-year annualized outperformance, but we also like to look at calendar years. And what really helps Allspring stick out are years like 2015, 2018, and even 2020, when small cap doesn't have very substantial returns or they're even negative. You can see that that manager really outperforms versus its small cap value peer group, as well as the other managers outlined there. If there's one devil's advocate or a con of Allspring, they don't always hit a home run in up markets. So if you look in 2021, although they outperformed the index and small cap value peer group, you know, Delaware did even better. But again, we like how they pair with the other investment managers, and they hold up well in a down market. So based on the long-term team, the consistent performance that the fund manager produces, as well as the lower amount of risk on a relative basis, we're recommending to replace Goldman Sachs small cap value with Allspring special small cap value. Any questions? All right, great. We did confirm with Comerica that Allspring is all ready to go as far as trading on it. So we'll go ahead and draft a trade sheet and send that over for signature here in the near future.
Can I entertain a motion to switch money managers?
Great. Before we get rolling.
In front of the horse?
Perfect.
We, switch over to Allspring away from Goldman Sachs small cap value.
I'll second that.
We have a motion and a second to move from Goldman Sachs to Allspring. Any further discussion? Hearing none, all those in favor?
Aye.
Opposed? Now get the paperwork going.
All right, fantastic. Chomping at the bit. Page 132. Kind of gave a false promise that I was done, right? But almost done. Just highlights again, October was a positive month for the retirement system. And I know Lily had hit on this, but total assets now just short of 153 million. And when we skip to 137, I'm looking at the top left corner, now system assets just over 159 million. And this just further demonstrates, when you look at that little circle pie chart, that we have moved to the new equity and fixed income targets, which of course we'll continue to review on a monthly basis as we get together.
Sorry, Jeremy, I'm 132.
137 now, Ed.
No, so you're.
Oh, yes,
132.
132.
This is ending October 31st. You said it was implemented in November, started in October, but implemented in November.
Yes.
That's why you're not seeing it there. Okay.
Yes, exactly. The purchases were made November 3. It took
Gotcha.
Loomis about a week to raise cash from the separate account manager. Yeah, good question.
There it is.
There's always that few days transition.
So you got us up to 65 when you did it. Now we're at 67 because we've had nice appreciation.
That's right. That's
Take
right.
that, huh?
The timing,
It's time.
we don't try to time these things, but the timing, because the purchases occurred in early November, worked out fairly well.
Excellent.
I shouldn't say we don't try to time them, but you know, you're right. Right.
All you got, buddy?
That's it.
That's it, okay. Okay, trust is done. Public comment. I think you're the only public here. Okay. Public comment. We'll move on to confirming the next meeting date. Jake?
I'm checking.
This always refers back to Jake.
Yeah, that works for me.
Okay.
Should note that in the record.
Yeah.
I'm trying to get a moving target. We did it.
It's good for me. Yeah.
Okay. Cool. We've been going through our regular order of business, as Mark would say. We adjourn.
So what was the date we threw out?
December 19th. 1:30.
Yeah, December 19th at 1:30, right?
Yep.
Perfect.
Sounds like some time.
Kind of weather we